Should she go ahead and take the cash out and apply it to the principal she owes on her house? And my answer to that is absolutely yes. That's a great idea. Hey everyone, JR Dukes with JRDukes.com coming at you with another video. I appreciate you joining me today. Today's subject is we're going to talk about how do I protect the money that I already have in the bank. I had a viewer of mine that recently sent me an email and asked me the following. She goes, I already live here in Florida and I'm being sued currently by a creditor for $37,000. A judgment is pending. So there has not been a judgment yet, but she clearly anticipates on a judgment coming very soon. She goes on, I have money in the bank that was inherited and I was hoping to save it for retirement. Should I take that cash and apply it to the principal that I owe on my house? Her next question is also, I have a free and clear car. Will they try to take my new car? Any advice would be appreciated. All right, and of course this person's name being withheld for privacy concerns. But this question is a perfect question that we all might face at some point in our life. This is one of the many reasons that I love talking about asset protection. This is a prime example of what can happen in your life if you don't think about asset protection ahead of time. We never know when something unforeseen is going to happen. Maybe we will, God forbid, become sick. Maybe we will have a car accident that we did not anticipate having, and there's not enough insurance money to pay for the accident and to cover your side of the loss. There can be a whole list of reasons why you might find yourself in a situation like this lady right here. Now, let's dissect her question. She says she is currently being sued by a creditor for $37,000 and the judgment is pending. So in other words, she's probably at the final stages of the judgment. I am going to assume for the purposes of this conversation that this is not what I call a super creditor that is suing her. Specifically, that means the government. The IRS, generally a spouse, can also be considered a super creditor. I don't get that vibe at all. We're just going to assume it's your standard run-of-the-mill collector creditor. And that's what we're going to assume for the purpose of this question. So what I told her is the following. First of all, I'm not sure what she means that I have money in the bank. Is it money that's in an IRA account? Is it money that is in some kind of what they call an ERISA account? Or is it just a general savings and checking account? Also, it makes a big difference. Is the money in the bank only in her name, or is it in her name and her husband's name? So all these are factors that we will have to consider in order to answer this particular question. The money is just sitting in a checking account with her and her husband's name on it. Fortunately for her, she is married, of course, to her husband. And in Florida and a few other states, there is something called T by E. It stands for tenants by the entireties. And that's a fancy way of saying it's basically jointly owned. However, let me illustrate it this way. In most states, say it's a husband and a wife. We'll call them Mr. and Mrs. Smith for this particular example. If there is a judgment against Mr. Smith, well, the account that says Mr. and Miss Smith is going to be fully liable for that particular judgment. In the state of Florida and other states that have what they call T by E property for married partners, you are allowed to own a bank account and it's in that joint T by E name, which means unless the judgment is against the spouse and the other spouse together, that money is exempt from garnishment, from collection in that particular bank account. Now, having said that, there are a few other type of checking accounts we at least need to mention briefly. If you're an older adult, if you're a senior, and you are receiving, let's say, SSDI or SSI, you generally have no worries. The way the law works in that regard is if there is a judgment that is received by the bank and they're saying, hey, I want you to garnish this particular account, there are very strict rules that they must adhere to that has been outlined by the U.S. Treasury Department. And essentially what the bank has to do is they have to verify that it is money coming into that account electronically. Now, this is assuming electronic funds from the U.S. government, the Department of Treasury, into your checking account. To make a long story short, they will basically double the amount of your monthly contribution, the monthly benefit that you get into your account, and that amount of money is protected absolutely. It doesn't matter if you took the money out, put the money back in, none of that matters. It only matters that you have no more than your benefit times 2 in that particular checking account in the last 60 days. And in that regard, you're going to be fine. The other type of account we want to talk about is, let's just say it's an account where it's only one person, the person with the judgment. Well, of course, that money is going to be at risk. All a creditor has to do is send the bank a garnishment, and when they come across that account and that person's name under their Social Security number, they got a problem. They're going to lose that money. So they better not put money in a bank when you have a judgment against you if it's in your sole name. Now, if you have an IRA type of checking account, or more specifically, and frankly, it's better to have it in the name of what's called a ERISA, a ISRA account, those accounts are generally 100% protected from garnishment additionally, especially in the state of Florida. My best recommendation for this particular lady would be to actually get rid of her personal checking account, even with her husband. I just don't like having a judgment against me and having my name on any account. I would much rather just leave the money in the name of my husband or my partner exclusively, or I would rather set up a trust and fund it with this money that she wants to shelter, or I would form an LLC and put the money in the LLC. I would do something different where it's not linked to my Social Security number, because let's face it, the banks, they're people. They can make mistakes. And if they see a garnishment and they see your name attached to that garnishment, who knows? Somebody might accidentally, inadvertently freeze that money, and then you have to go to court to try to get it back. And that's not the position you want to be in. You want to take proactive measures so you don't have that problem from the get-go. In conclusion, this money in this particular lady's checking account is safe as long as the judgment is against her exclusively and the account is in the name of her spouse and herself together as T by E. As I stated a minute ago, I would rather see her open up a trust, open up an LLC, and put the money in an account with that type of title. She goes on in her email and she asks, should she go ahead and take the cash out and apply it to the principal she owes on her house? And my answer to that is absolutely yes. That's a great idea. That is a very legitimate and very standard thing that attorneys recommend routinely to individuals. If they're facing a lawsuit, if they have a lawsuit that is currently going on, people all the time take what they call non-exempt assets and they transfer it into a house or transfer it into some kind of asset that is what we call an exempt asset. And in the state of Florida, it doesn't get any better than your personal residence, providing that you are indeed living there and that that is what you call your domicile, is the legal term that we're looking for there. So yes, I would definitely encourage her, if she has the ability to do so, take that money, pay down her mortgage. That would be a fantastic option for her to protect that money immediately. This lady goes on and she says, I also have a free and clear car. Will they try to take my car? Very likely. It depends on what kind of car you have. And if it's in your name exclusively, I would say yes. It's a very easy thing to do. Generally, all a creditor has to do is send the paperwork to the Florida Department of Motor Vehicles, and they will lien that car. You don't want to leave a car in your name when you have a judgment against you. To be perfectly honest with you folks, I would never recommend an individual to have such a litigious asset as a vehicle in their personal name anyways. There are really no assets more litigious, more risky than owning a car. Generally speaking, my personal opinion is I would only own a car through a vehicle that I control, such as an LLC or a trust. I own vehicles in a trust, and I have owned vehicles in an LLC. I strongly encourage you that if you have a vehicle in your personal name, that you probably don't want to do that. When there is a suit that arises as a result of someone using that vehicle, I promise you, you're going to be part of the suit, because that's the way it works. So don't do that. In summary, asset protection is something we all need to think of critically. We need to think of it ahead of time. The more distance that you have between a judgment and the time that you are actually taking the asset protection measure, that is going to put you in the best position possible. So take action now to protect your assets. Taking action now to protect your assets is exactly what you need to do. The sooner you take action, the better off you're going to be. Please don't wait until it is too late. Fortunately for this particular lady that was kind enough to drop me an email, she lives in the great state of Florida, as so do I. Those of you who have been watching my videos and follow me regularly know I love the state of Florida for many reasons. One of the main reasons is because of its strong asset protection policies, laws, statutes. One of the strongest laws we have here is the Florida Homestead Law. You can basically take all your money at any time, put it in a Florida homestead, make sure you're living in that homestead, and it is fully and completely protected. Only very limited circumstances would cause you to lose your homestead, but for the vast majority of us, it doesn't get any better than a Florida homestead. I hope you enjoyed today's video. I hope you got some positive information from this video. If you enjoy videos like this, please hit the thumbs up button and subscribe so you don't miss any of my future videos. I do appreciate you joining me today, as always. I want you folks to always remember to have that free mind and never give up. I am J.R. Dukes.